Hey everybody and welcome back. This is How to Invest. Spencer here, and I'm bringing you another video on ACIC, Atlas Crest Investment Corp. They are merging with Archer Innovations, who make electric helicopters. So this video will be on a very important update on what just happened today. So let's get right into it. Today, the big news is that they finally broke $10, which is not a very big, thing to brag about for most stocks, but in this case, this stock has been down bad for a while. If we look at the 6 months chart, it has been a $10 chuck stock for almost 3 months now. So about 2.5 months, it's been $10 or a little bit under, and has little to no movement and no volatility, no volume even. This stock has not really been talked about or gotten a lot of press coverage. Part of it is because of their PR team isn't that adamant on trying to get media attention, but I will try and do the job for them. So as always, the market capitalization is the most important when looking at the stock. Even though the price of the stock hasn't been moving, the market capitalization hasn't really been moving either. And that's really the most important thing when looking at a stock, and it is at $630 million. One reason why they are currently undervalued is due to a price to sales basis, which if we were to look here at the statistics, it doesn't have it included for this, but they have $1.5 billion of sales already. We go back to stock price, $1.5 billion of sales. For a price to sales ratio, which would be the price of the stock or the market capitalization divided by the sales, would be a 0.4 for price to sales, and anything under or 0.5 or below, or even anything under 1 for a price to sales is extremely undervalued in my opinion, especially when you're looking at a growth stock like this, which has years of revenue growth to come, sales growth, and hopefully earnings over the long term. First, I wanted to get into the technical analysis. Since we are talking about the stock price majorly in this video, I will go into a more technical analysis. This isn't always my determining factor on whether buying a stock, but I do appreciate a nuanced approach and multifaceted. So I'm never just looking at just the stock price, just the company, just the catalyst, but a combination of everything involved that goes into a stock and the price and what determines that. So if we look here, they've been public since December, midway through, and just like all SPACs except for Bill Ackman's, it started at $10 and pretty quickly ran up to $18.60 by 2 months later. So within 2 months, it went up almost 100%, which is quite rapid for anything in the stock market. If you can double your money even within a 5-year period, that's considered pretty good amongst most people. 20% gains is pretty unheard of for a lot of older investors. And then from there, they had a swift move downward and then eventually below where it went public via SPAC. So we can see here, like we said, it has been kind of doing nothing for 3 months. This is March 25th. But if you're looking here, I have a couple indicators. These are moving averages, and what they do is kind of tell you what an average of the stock would do based on kind of less volatility and less buying pressure as it did. So the days here indicated are a 50-day moving average of the stock price, a 25 moving day average, and then a 10-day moving average, and the colors are blue for the 50, 25 for the red, or 25 for the yellow, and then 10 for the red, and 5 for the light. Oh, 5 is the light blue. Sorry, purple is the 50. But if we look back here, anytime that the stock began to move above all of the moving averages, it would test it and start moving up sharply, and then had no support, and then would drop back down to support levels. And there was high amounts of resistance anytime it tried to break above these moving averages. You can see here it is kind of bouncing off the moving averages for about a week here at the beginning of the year, and then it kind of stays along with them, drops below, and then as soon as here it drops below all of them, 3 here, it doesn't have the 50 because it wasn't public for long enough, but as soon as it drops below the 5, 10, and 25, it starts going on a tear. Once it breaks on the first of the month, it doesn't go below again until it sells off on the 22nd. So if you held for 3 weeks, you would have had about a 50% gain just using the moving averages. That you use that as your buying sell indicators. And if we look here, where we're at currently, we just started to emerge past of all of the moving averages. We'll zoom in here. Today was the first day where we have been clear the whole candle that includes the wick. The wick is the buying and selling pressure at the bottom and top, not always on both sides, but here it is clearly above. And today was the first day that we have had a more than 1% gain in the stock in over 3 months. So that is quite substantial. Today the volume was over 1 million, and you can see down here if we zoom in, it really has been kind of stagnant for quite a while, other than this day where it moved almost 2%, but that was the first day in about almost a month. So we will get into the article I was talking about. They also have a PR stunt coming up. They are launching one of their prototypes for their helicopters. And the article is right here. It says, Archer announces unveiling of eVTOL aircraft. Correct me if that was completely butchered. I would imagine it is. But on June 10th, so which is in 2 days, I guess on, was that Friday? Or Thursday, marks the debut of Archer's inaugural all-electric aircraft capable of 60 miles and 150 miles per hour. In addition to COVID-safe event, the aircraft unveil will simultaneously be live-streamed, so anybody who wants to see this will be able to. After announcing partnerships with United Airlines and Stellantis, Archer has emerged as eVTOL powerhouse as the cusp of certification and only UAM leader with a commercial order for their electric aircraft. California-based Archer, a company designed and developing electric vertical takeoff and landing aircraft. So that's an acronym. That's what it stands for. Basically just electric helicopters. Announced today the plans to unveil the inaugural aircraft maker. The unveiling of the 2C. So this is a big deal here. The 2C is definitely a prototype. They will look to increase the capacity of further models, but just for the demonstration today, they don't really need a bunch of people. And in fact, if they were to have a bunch of people and this were to go wrong in a worst case scenario, and the plane were to crash or go down and people were harmed or killed, then really the less people, the better. They don't want many people being injured, especially since it's a prototype and a test. On June 10th, Archer will host an intimate event in Los Angeles. So this is the unveiling. And it says, Archer's air mobility platform will move people throughout cities in fast, sustainable, and cost-effective manner. Fully electric, 100 times quieter than a helicopter. A lot of people's questions about electric helicopters and what the difference between a normal one is. Helicopters are very, very, very loud, and especially if you're in an urban area, it doesn't really make a big difference, but anytime you're traveling to a less urban and you're getting to more rural areas, it's going to be a huge deal. And if you're going anywhere outside of the city, or even within the city, it can be a big nuisance for people to hear that kind of noise. And especially if you're going to be having quite a bit of them, then it could really be detrimental to the business model if they were to be as loud as helicopters. But that is one of the big selling points on these, that they are much quieter than the helicopters that use gasoline. Makers unveiled bring one step closer to sustainable travel, more accessible and affordable for people living in the world's biggest, most congested cities. The co-founder of Archer said, and co-CEO currently, Brett Adcock. Archer has seen a period of tremendous growth, and we are proud of what our team has already accomplished. We are excited to continue on our timeline towards a commercial launch and move urban transportation networks into the skies. At Archer, we are planning in the long term. We're playing the long game and investing in better, more sustainable transportation for generations to come, says the same co-founder, different co-founder, Adam Goldstein. Setting a date for our supporters to see a mission materialize is a momentous occasion, not just for our team, but for future cities, shareholders, doesn't say it, but I'll just drop that in there, and green transportation alternative. We're grateful for our partners. And then it says, Archer recently announced a merger with ACIC, which is the stock that we are analyzing currently. And they value the company at $3.8 billion. So this is one of the key figures I wanted to get into. $3.8 billion is what ACIC is buying Archer for. So that will become the market capitalization of the company eventually when they merge. And they are set to merge within the end of the quarter. So the second quarter already ended with June, but they're supposed to merge by the end of Q2 results for their financials. So they usually come out about a month afterwards of the quarter ending. So they are supposed to merge within a month. Now this could be pushed back. I haven't heard anything on this, but they were supposed to merge sometime within the announcement of Q2 earnings. Q2 earnings. So, and then 3.8 billion is 6% or 6x from the current valuation. And that is another reasons why I'm very bullish on this company, because that is including some of the added hype along with the stock and increases their price to sales by quite a bit. If we use a price to sales for this and the 3.8, and we still use their $1.5 billion in sales for this year, and they do complete those sales, which I expect them to. If they're completing prototypes in June, hopefully they'll have out real working models within December, or hopefully sooner. 3.8 would be about a 2.5 price of sales, which is still quite cheap, considering this is a huge growth stock. If we look at some other growth stocks, maybe like Shopify, and pull up their price to sales, I bet you will be shocked at the comparison. So if we look here at statistics, price to sales, 44. So that is still 22 times cheaper than Shopify on a price to sales basis. And then it kind of goes into more about the company. There are two comments here. It says, finally been bag holding at $17. I wanted to say, if you're bag holding at $17 and you've just been watching it, shame on you. You should have been averaging down. It's been at $10 for 3 months. Average down to under $10. It's pretty easy considering when the stock hasn't moved or gone above $10 in over 3 months. So if the stock never reaches $17 again and he has to sell at a loss, then that is his loss. And then it says, the lack of comments tells you just how under the radar this company is. Get in early at a discount. This is the one I wanted to highlight. Completely agree with that statement. And I just think this is a very, very under the radar stock. And not really many people are talking about it. I go on message boards under a lot of brokerages, and there are very, very little and far in between comments on this stock, talking about this stock. Compared to other growth stocks that I follow. So I just thought that was interesting. Hopefully we will get some hype around this stock and some volatility, or not volatility, some hype around this stock and some volume on June 10th. But if you've made it this far in the video, thank you very much for watching, and come again.